I'm Catherine Ross, and I'm here live from the floor of the NYC. Jim Cramer is back and is with me this morning. What's on the top of your mind?
ESG. Satya Nadella made a very good, compelling case for how you can roll back since the beginning of your company the carbon footprint, and they're doing it by three different scopes. Scope 1 is the company itself. Scope 2 is the suppliers. That's really important. Scope 3 is users. That I don't know of how they influence or push, but I find that you're going to have to be really, really careful if you're not doing something about the environment. This idea that Mark Benioff put out there, which is one of the stakeholders is the earth, that's just not acceptable for a lot of companies. It better be if you want your stock going higher.
This morning over on Real Money, you wrote a column based on the market's all-time highs and how you think that this market is too high, which repeats what you've been saying for the past couple of weeks.
Yes. I mean, it was something that Matt Horween put in my head, my writing partner. See, here's my problem. You look at the better than expected banks, and what do? They tread water. So what happens if something isn't better than expected? I think it's just going to be hammered, and we're going to start getting some bad earnings. You know, the banks are pretty easy to understand because they've got steady revenues. It's no longer graded by net interest margin, but it is not easy to understand how some of the industrial is going to do, given the fact that China slowed down. Target I think is a good example of what could happen in retail, other than Costco, which is doing well. I do think that when you get a situation with a company that's not regarding home goods, I think you're going to be in trouble. So, I mean, in terms of retail. So, I just think that you've got to be very careful here, because the lesson of the banks is if it's done well, at which a lot of stocks have done well, and you get a great quarter, nobody cares.
I want to give our viewers some cliff notes, though. So let's take a step back. What are three ways that investors know now is the time to buy when the market's at all?
Well, one, it's got to be softened. There's got to be a belief that it's already come down. It's had one good quarter since then, not the first good quarter. Second, it's got to have a secular theme. I mean, the 5G plays are really working. And the third would be rates have to come down in order for things to win. So follow rates. Now, one of the things that I find the top-down people, which is pretty much everybody who runs billions of dollars, they're uniquely focused on the Fed. Don't lose. You would have, if you would just focus on the Fed, you would have gotten out a long time ago. There was no reason to be in. You have to be focused on companies, and the fact that so much money is indexed really tells you that the only way to beat the market is to actually examine companies. Most people are bored by examining companies. I'm not. It's a major focus.
The coronavirus and the bans that could follow the virus, traveling bans, were impacting markets this morning. But I want to take a longer term look at this. Why are markets falling? Why are stocks falling when we're really not going to see an impact from the coronavirus for another quarter or so?
Well, I think some of it is we saw a big impact in SARS. Now, does not seem as lethal as SARS. Some of it is because it's the travel season in China, and you have to believe that there will not be as much traveling, given the fact that you don't want to get this. Maybe you want to stay at home. And the stocks that are really going down are cruise ships, because China's got a big cruise. That's been a very good business for the cruise companies. And the casino companies. Makes sense. Casinos, got to be very careful. There'll come a time when they're going to bottom, but we need to see numbers cut first. When the numbers are cut, you get a chance to buy.
Let's talk about Boeing. Boeing is reportedly looking to get as much as $10 billion in loans from banks, but this stock has been so resilient so far.
Yeah, I mean, look, you get the same news over and over again. I mean, this morning it was New York Times 2009 perspective. I mean, the plane's flown millions and millions of miles since then. It didn't really mention that. I thought the transparency last week about talking about how they needed to do the simulation was a major change. I also think that there was a panel came out which said that they didn't snow the FAA. It was an independent panel. That mattered. The pent-up demand here is amazing. I don't know how they're going to make it so we want to fly it. I mean, can they rebrand it? I don't know. I think what they have to do, they may have to fly it for like 1 million miles before it comes in, just Boeing. I mean, just say, listen, we just flew it 1 million miles. Now, I don't know if they can do that, but I do think that you'll ask if it's a max. And if you'll ask if it's a max, then you won't take it right now.
Uber Eats is confirmed that is selling Uber Eats
Buy
India.
Buy the stock of Uber. I mean, they're doing what I wanted, so you can't then suddenly say, well, it doesn't matter. They are getting out of the unprofitable Uber Eats. It's a huge win. So buy Uber.
Well, they're getting out of it in India. They're selling their Uber Eats India business.
Well, look, remember, it's just a handful that's causing the loss. That was obviously one of them, or else they wouldn't take it. So I think that that's a very good move.
So do you think that they're following your advice? Because you've been harping on how they need to get rid of Uber Eats.
They're very independent. Dara listens to himself. Sadia listens to himself. When I was up at Microsoft, Jelinek was. They don't watch the show, or if they watch the show, it doesn't matter to them. I mean, I found there are very few, and not to be too humble, but on the birthday of Regina Gilligan, executive producer, but nothing's being done because of the show, which is a shame because we've been behind ESG for some time.
All right, Jim, it's time for us to head on over to our Action Alerts Plus Daily Rundown show where we're going to break down your interviews from last week, which were all really, really good. If you guys got to catch up on those. So thanks for joining us and welcome back, Jim.
Thank you.
I'm Catherine Ross. Catch us over on actionalertsplus.com, and we'll see you tomorrow.